Hey guys, in this video I will show you the correct way of using the Stochastic RSI indicator for day trading and swing trading. The Stochastic RSI is one of my favorite indicators because it combines the features of the stochastic oscillator and the relative strength index. The indicator increases the sensitivity and the reliability of the regular RSI indicator as it applies the stochastic formula to the RSI values instead of the price value. So the stochastic RSI is basically an indicator of an indicator, but also meaning that this is a lagging oscillator. By itself, the stochastic RSI is not a reliable indicator. If you want to swing trade or day trade only with this indicator, it will be a very hard task to find valid signals. Now, you might wonder, what are the differences between the stochastic indicator, the RSI, and the stochastic RSI? Let's look at this Bitcoin chart to see if we can spot some visual differences between the simple RSI, the stochastic, and the stochastic RSI indicator. From a simple glance, we immediately see that the stochastic RSI indicator is more volatile compared to the other two indicators. What this means is that it will generate a lot of noise. Also, we can observe that the stochastic RSI generates more overbought and oversold signals than the simple stochastic oscillator. If we look closely at the chart, there are more false signals offered by the stochastic RSI compared to the other two indicators. We can safely say that during trending conditions, the stochastic RSI is not a reliable indicator for spotting overbought or oversold entry points on the market. In what concerns trading divergences, the stochastic RSI also lacks. I don't know about you, but I can spot the divergences more clearly on the simple stochastic oscillator and the RSI. So, how do we trade with the stochastic RSI? First, we forget about overbought and oversold signals. As many traders use the RSI in a wrong way, there is a high chance that they will also use the stochastic RSI in a similar manner. Entering counter-trend positions whenever the stochastic RSI indicates overbought or oversold conditions will only lead to losing positions. Being a lagging indicator, my advice is to forget about using stochastic RSI for trading overbought and oversold conditions. In a non-trending market, this indicator will generate a lot of false signals. Tell me, do you see any clear entries on the Bitcoin chart? Because I don't. A smarter use of the stochastic RSI is to look for divergences between the indicator and the price of the traded instrument. But here's the trick. If we want to search for divergences, we only need to display the D% on the chart. The reason I only display the D% is simple. I like clean and clear charts, and the stochastic RSI could be quite confusing. Here's another Bitcoin chart with the 200 exponential moving average and the D% of the stochastic RSI added. What we need to do is to search for divergences between the stochastic RSI and the price, but only in the direction of the main trend indicated by the exponential moving average. So, we never take counter-trend entries when trading the stochastic RSI divergences. We just stick with the main trend on the market. In this example, as we are in a clear downtrend, we only look for divergences that allow us to short the market. Here is my favorite way of using the stochastic RSI. What I prefer to do in order to make the indicator more reliable is to smooth it by using longer periods. For this setup to be profitable, I prefer to use the 100 period for the RSI and the 100 period for the stochastic. The trick here is to add a 50 level and watch for bullish and bearish periods. Remember how I said to ignore the overbought and oversold levels? While most traders seek to enter counter-trend positions when they see stochastic RSI in overbought and oversold areas, I prefer to look for continuation movements. But that isn't enough. Even with this setup, the stochastic RSI will also offer a lot of noise. That's why we have to adjust our entry points. My preference is to add a MACD indicator with 10, 100 and 1 settings. Basically, these MACD settings are tracking the crossover between the 10 EMA and the 100 EMA. So when the stochastic RSI indicator is above 50, this signals bullish pressure, and when the indicator is below 50, this translates into bearish pressure. I prefer to confirm the entries with the MACD. MACD above 0 level suggests a bullish outlook, while MACD below 0 level indicates a bearish scenario. The setup is simple. We look for market strength with the stochastic RSI and the MACD aligned. Now let's look at this Dow Jones Index chart. We simply search for buy entries when the stochastic RSI is above its 50 level, only if the MACD confirms the move. Also, we aim to short the market when the stochastic RSI is below 50 and the MACD is in negative territory. Here's another chart, this time the DAX index. We look for buy signals when the stochastic RSI is over 50 and the MACD above 0, and we look for short opportunities when the stochastic RSI is below 50 and the MACD below 0. By using the stochastic RSI this way, we gain an important advantage by looking differently at this indicator. We don't trade overbought and oversold levels, and we don't chase tops and bottoms as most traders do. We are searching for market strength. As I was saying before, when day trading or swing trading with a stochastic RSI, we must use it in conjunction with other technical indicators or chart patterns in order to maximize its effectiveness. If you got any value from this, please consider subscribing to our channel and leave us a like, as it will help us massively in the future. Until next time.